Hey, it's Rob. Welcome to Everyday Investor, the hottest investment show in the world. That's right. I said it. I don't care who knows it. I'm super excited about this show. We're going to be talking about how we can make money lending money, how we can make money by being the bank, if you will. Remember, whenever you're offered any type of investment opportunity, you always want to ask 4 questions to start. Number 1, what is the return on my investment? 2, when do I get that return along with the money that I put in? 3, what is minimum investment amount needed? And 4, what is the risk, the worst case scenario? This show is designed to help us grow our money. You see, often the challenge can be is we take our precious time, we go to work, which is a good thing, we make money in order to eat. But imagine a life where money could make you money. You could work a little less if you wanted to, and then you could spend that time with family, friends, engage in a purpose greater than yourself. That is what Everyday Investor TV show is all about. Like I said, today's topic, we're going to learn how we can make money by being the bank, how we can make money by lending money. And I'd rather have no one else teach us that topic other than the finance guru himself. Kyle Ford is on the show with me today. Don't go anywhere. We'll be right back.
Yeah, so I want to start with saying there's lots of capital in the market today. There's lots of opportunities to borrow and acquire properties. Remember, there's a lot more than the big 5 banks when it comes to financing your deal.
The importance of hiring a contractor that's works with the real estate investors is they really understand the process. The difference between wants and needs is very important when it comes to REI investing. So, do I need to fix this electrical panel or do I need quartz countertops? Well, if you're working with an REI contractor, if you're okay with me calling an REI contractor, is because, we work with you guys. We understand the difference between ROIs and the difference between the pretty stuff and the important stuff. I really feel like if you're going to hire somebody for a conversion process, they should understand the conversion process. If you're just doing a home reno and you want to do a kitchen project, you just hire a small kitchen company or a small company like that. But when it comes to the conversion, when it comes to REI, work with an REI contractor. If you have any questions, reach out to me.
The mortgage world has changed. Has your advice? Are you looking for a modern approach to your mortgage planning process? Advice tailored to your unique, ever-changing circumstances? Whether you're upsizing, downsizing, purchasing, or refinancing, the Kyle Ford Mortgage team works with individuals and companies to custom tailor the right mortgage product for you. Working with a wide selection of lenders, we're here to serve our clients and help them achieve their real estate and retirement goals. Contact the Kyle Ford Mortgage team today, Canada's mortgage choice.
Hi, it's David Smith here from the Q Theta Fund with your investment tip of the week. Now, investing in the stock market can be very difficult for everybody, and that's because emotions can often come into your thinking process. Not only is it tough to deal with your emotions, but then you have other noise that's out in the marketplace coming from the financial media, the media in general, and the opinions of so many different people telling you what's good, what's bad. It's very hard to track. But what that does, it provides confusion as an investor. As a good investor, you need to get away from that and focus on the things that count, which is evidence. What is evidence? It's earnings reports from companies, it's companies that are buying back their stock, or it could be a company that's raising its dividend. These are all facts and evidence-based things that you should be focusing on, not the noise, not the emotion. You don't want to get too excited, and you also don't want to get too depressed. Stay the course, focus on the things that matter, focus on the evidence, and that will make you a better investor. I'm David Smith, and that's your stock tip of the week.
Hey, it's Rob. Welcome back to Everyday Investor. We're learning how we can make money by lending our money. Kyle, it's great to have you on the show with me, my friend.
Thanks for having me, Rob. Always excited to be here.
Yeah, so I can't wait till we see each other in person. It's been a while.
Too long.
Yes, here we are in 2022, kind of midwinter, and it looks like things are going to lift. It looks like we're going to be able to spend time and hang out and go for, grab a drink, and I'm really looking forward to that.
Couldn't agree more.
In the meantime, I know that you've been enjoying your family, getting a little bit of time down south, but you've been working really, really hard, my friend. I mean, I see all the different investment opportunities that you're putting out there, and I want to start putting them on this show as well so that the viewers can see them. But it's very interesting because most mortgage outfits, they, are dealing with a lot of residential, just kind of helping someone to refinance, and you kind of do everything. But you predominantly, you work with investors. You work with people like Rav and people that are like watching this show, the everyday investor. Yes.
That's right. We specialize in helping investors acquire, grow, and scale their real estate portfolios, as well as help lenders get a great return on their capital by participating in these deals.
So we're going to talk about, and we're going to focus on this show from a lending perspective. So let's say Rav had, $50,000 and I wanted to lend it out. Let's say I have money in securities, rather registered funds, RSPs, TFSA. I want to lend it out. I know you can help us with that. But before we get into that, talk about the other side. Talk about those out there that want money for their investments. I mean, they come across a property. They want to turn a single bungalow into a triplex. They need a few $100,000. What's kind of the process? They give you a call, you assess it. I guess really my question is I know you're very, very big on protecting the investor. You're very big on protecting Rav when he lends his money to that investor. What's the process and how do you vet it?
Yeah, so I want to start with saying there's lots of capital in the market today. There's lots of opportunities to borrow and acquire properties. Remember, there's a lot more than the big five banks when it comes to financing your deal. If you're buying a more cookie cutter condo, single family townhouse that's in good shape, yeah, you're probably going to want to go with a bank mortgage and get something at a low interest rate. But if you're looking to acquire outside the box properties that maybe need work, or are you going to add additional units, you may need to become a little bit more creative with the financing and how you structure it. So that's just, I wanted to start with that. But in terms of how we work with borrowers and how we get things set up for you is, as you mentioned, we're a little bit different. I am not a transactional broker. I don't just like to pick up the phone, slap a mortgage on the deal, and call you in 5 years. I want to work with you to build a real estate plan that accomplishes your goal. So generally the first thing we do is not mortgage your next purchase. We want to review your current finances. If you have properties now, how's the debt structure on the mortgage? I'll tell you, in my many years of investing in real estate, it's very rare that I've ever actually taken a mortgage to maturity. I often want to change that structure of that debt to allow myself to access more equity, potentially lower my interest rate, or put myself in a more advantageous position to acquire more properties. So if you're a borrower coming to me, the first thing we want to do is start with the mortgage review, really dive into the nitty-gritty of the properties you already own. If you don't own any real estate today, that's okay. We can get you pre-approved and set up to go forward. When it comes to using a conventional lender, there's a lot of criteria that the banks have, or banks mix B lenders in terms of income, credit, documentation. And if we're going on the private side, the one thing I really always like to assess is character. Who are you and why should we lend to you? And what I mean by that is, I'll give you an example. I have some clients that borrow a lot of private money. And I know if anything ever went bad in one of those deals, that client would go work 6 jobs to make sure that lender was paid back. So those are the type of character assessments. So we're going to do the analytical stuff and get to know you on a personal level as well. No,
absolutely. It's great. I mean, I've one of the things you've said is, Rav, make sure you're not sitting on money in your very own home, and you've shared that with me often. And so as a result, because prices have increased, it's been crazy, I'm using my house as a bank account. I've refinanced with your tutelage. I've refinanced twice in the last 2 years. and been able to use my house as a bank to be able to put that money into an investments. So yeah, no, very important. And yeah, I want to make sure people didn't miss what you just said. We're looking at the actual, so now let's say Rav needs to borrow $300,000 because I want to turn this bungalow into a triplex or whatever the case is. I come to you. You may think Rav's filled with integrity and has great character and so on and so forth, but that's not the first and foremost reason that Rav's going to get that $300,000. Your team wants to look at what I'm doing, make sure the numbers work. Then you go into the second phase. Is Rav a good guy or not? And then you put it out to your database, and now soon to be the viewers on Everyday Investor TV show. You put it out there and say, okay, guys, here's an investor. His name is Rav. He's done this multiple times, and he's looking for $300,000. That's kind of the process.
That's right. That's exactly right, Rav.
And so what I want to touch on is, now somebody's watching, and in my early days I said the same thing, is why would Rav want to borrow $300,000 and pay 10, 11, 12%? So really what I'm saying is, Kyle's going to set it all up. Rav's going to borrow $300,000, and at the end of a year, I'll pay back the $300,000, but I'm also going to pay anywhere from $30,000 to $40,000 on top of that. Why would I do that?
Yeah, it's a question I get asked all the time, and there's several answers to that. One is people who are doing a lot of transactions are often outside the traditional bank bubble. When it comes to getting a mortgage through one of the big five, we have to fit, what do they say, a square peg into a round hole. We have to make the fit into the box. So often these people who are doing many transactions are outside of that traditional qualification. So they're borrowing at a higher interest rate because it gives them access to additional capital. But more important than that, most professional investors who are borrowing at 10 to 11% are earning a substantially higher rate of return than that. Once they go through a BRRRR, flip to yourself, R5 type strategy, they're earning a 30, 40, 100% rate of return on their money. They're happy to pay an investor 10, 11, 12% for funding that short-term capital need. And I think that's the other part too. Remember, the people who are borrowing money at 10, 11%, they're not getting a 30-year mortgage from you at 10 or 11%. They're generally borrowing that money for 1 year or less, paying a higher rate of return to allow them to do deals that don't fit in that traditional bank bubble and grow and scale their portfolios faster.
No, well said. Listen, let's dig into some numbers. We'll take a break here, and we'll get into some numbers of. I'll give a live case of what one of the deals that I've done, and you share from the viewers. If they want to be the bank, if they want to be the lender, they can enjoy 10, 11, 12% returns. Teach us how we can do that. We're talking to my good friend Kyle Ford. Don't go anywhere. We'll be right back.
You've always dreamed of having rental income, but buying a rental property? Well, that's a tall order. Capitalize on the space in your home instead. Renovate and rent out that space with ease with LegalSecondSuites.com and the team at Wise Construction Group. With LegalSecondSuites.com, our talented team of BCIN designers, engineers, carpenters, and tradespeople can transform that unused space into a beautiful, legal, and safe rental unit. We're empowering the everyday homeowner to become an extraordinary landlord. Get more out of your home. Visit LegalSecondSuites.com for more information.
Hey guys, Omar Khan here from Theta Trading. I want to talk to you about market corrections. Market corrections occur often, right? The stock market in the last 50 years, on average, has gone up about 11% a year. But that doesn't mean it's a straight rise up. When markets go up, they fall sometimes. They go up, they fall. But on average, 11% a year. So the odds are heavily in our favor that the markets are going to go up. At least they have historically. Now again, when the markets pull back, and they do over and over and over again, how does one deal with it? Well, you deal with it by always investing in high quality companies that you understand. So if a pullback happens, you have the confidence to buy more if you have the ability to do so. Ultimately, even if you don't have the ability to buy more, you should always remain unnerved. One of the best things about investing with confidence is being able to sleep well at night. If you cannot sleep well at night, you should consider changing your investments around. But corrections will happen over and over again. The key is to understand them and to be prepared and to be opportunistic. That can only be done through understanding what you're investing in. We'll see you guys next week.
The mortgage world has changed. Has your advice? Are you looking for a modern approach to your mortgage planning process? Advice tailored to your unique, ever-changing circumstances? Whether you're upsizing, downsizing, purchasing, or refinancing, the Kyle Ford Mortgage team works with individuals and companies to custom tailor the right mortgage product for you. Working with a wide selection of lenders, we're here to serve our clients and help them achieve their real estate and retirement goals. Contact the Kyle Ford Mortgage team today, Canada's mortgage choice.
Hey, it's Rav. Welcome back to Everyday Investor. We're talking to Kyle. We're learning how we can make money by lending money, how we can make money by being the bank. Kyle, you are a wealth of knowledge when it comes to this. And what I love about what you're doing is you're not just a guy that's helping, two parties come together, the borrower and the lender. You're actually doing this yourself. I mean, you're involved in 2, 3, 4 properties right now. You're looking also in the States. You're looking, down south. I mean, you're active. So whatever's going on, because rules change all the time with this great government of ours, you're on top of. So thank you for being an active investor yourself. For those that are watching, you can lend your money out. So for example, yours truly, a while ago, I bought a property, I'll kind of round the numbers, but let's say it was $800,000, and I needed $300,000 to do what I wanted to do. So I would go to a guy like Kyle, and Rav would borrow this money. And I didn't mind paying 12% on this money. And it was for 1 year. But when we were done doing what we did, and it was a lot more than some lipstick with $300,000, I'm in this property for $1.1 million. But if I told you now, a year later, this property is now $1.4 million, do you think that I care that I paid in interest 12% on $300,000? I paid $36,000 in interest if I just made $300,000 in the deal. And this is exactly what Kyle is talking about. There's no bank that's going to give me $300,000 on a $900,000 property to do renovations. And so this is what Kyle is teaching. And so Kyle, where are you finding kind of the education curve? I know it's growing, but do most people still not know about this? That A, they can lend money, and B, those that are borrowing, there's nothing wrong with paying 10, 11, 12%. Where are we on that education curve right now?
It's tough to say. Here's what I would say. Many people just stop at, I don't want to pay 12%. And not really dive into the numbers of what is it worth when I'm done. And here's what I'll say as a person who pays these rates all the time. I don't want to pay 12% either. If I can get it for 3, 5, 7, anything less than 12, that's my preference. But here's what I don't want to do. I don't want to sit on the sidelines and not do a deal because of the cost of money. One of the old adages is, if we're digging for gold, who cares about the cost of the shovel? Right? So the 12% borrowing cost, I think we're getting there. I think more and more people are focused on the rate of return as opposed to the cost of the money, which I think is absolutely critical.
Yeah. I mean, it's the same thing if, in terms of like lending money out. If I can lend money out at 12%, but I refinance my home and have to pay 3%, then I'm making a 9% spread. There's nothing wrong with refinancing, paying, 2, 3%, whatever it is. I know it's a lot less, but let's just call it, 2, 3%. But if Kyle can help me make 11, 12, well, there's a spread on $100,000. There's 8, 9 grand, pay a little bit of tax, and then, go to Mexico for a week or wherever you feel like going. So let's talk a little bit about how Rav now can be the bank. So often, what type of investors that need money, come by? So what are we looking at? Are we looking at like somebody who just needs 100 grand? I've seen you across my email sent from you. Some people need $2-3 million, and you might pool a bunch of people together. So kind of teach us a little bit what would be a typical investment where one of the viewers could be the bank.
So a typical borrower could have many different scenarios, but in my specific practice, we focus on investors. So what that means is our clients are never they're not in a distressed situation where they're struggling to pay the bills and they need a private mortgage. They're typically looking to do some type of value add real estate deal. Maybe they're adding an additional unit. Maybe they're renovating an apartment, building or developing. So what they're looking to use private money to grow and excel their project. As a lender, how you can get involved in that are many different ways. You can participate in a first mortgage. So you could be a part of the acquisition of the property and lending them the capital they need to buy the property. Or you could be involved as a second mortgage, which can be involved in the construction and the improvement. Now, as a first mortgage, our average rates are 10% interest plus a 1% lending bonus. And as a second mortgage, you could be between 11 and 12% plus a 1% lending bonus.
And why? And Kyle, how come you separate that out? Is that just a governing kind of rule? Like, why are you not saying 11% as opposed to 10 plus 1?
So the idea is this has to do with annualized returns. We want to make sure that we're hitting a 10% minimum benchmark. Also, we want to make sure that the lender is getting paid for their time up front. So for example, let's break that down. If we just paid 11% interest and for whatever reason the borrower borrowed the money and then wanted to pay it back after month 1 or 2, the 11% interest isn't as attractive anymore. But by getting the 1% lending bonus up front, you're paid a fee up front for your time. I always joke it covers the coffee on your way to the lawyers to sign for the deal. And it makes sure that we're meeting a minimum benchmark of 10% on the annualized rate of return.
Okay, so Kyle, Rav is going to, because Rav is a passive investor, Rav is going to lend money to Kyle, who's an active investor. And Kyle needs, $200,000. So Rav's going to give that to him. And in exchange, Kyle is going to pay Rav, second mortgage, 12% plus a 1% lender fee. And so you're saying to me that it's 13%. If it's borrowed for a year, Rav is making 13% on the $200,000. I'm making $26,000. After 1 year, I get my $200,000 back, plus I get my $26,000 back. That's what you're saying?
Correct.
And Kyle, this $200,000 can come by way of cash. Can it also come by way of registered funds?
Absolutely, you can.
So I can use my RSPs for this?
Yes, absolutely.
So those that are watching and they've got a few $100,000 RSPs, they can lend their money out, keeping it within the RSP, not be taxed on it until 65, 70 years old, and it stays right in there. And so you have a mechanism to be able to do that.
Yeah. So we work with, so in order to lend your RSPs, it's likely they can't stay at their existing institution. Most banks lend their own mortgages, so they don't want their clients lending mortgages out of their own accounts either. So you need to move your funds to a trust company that will administer these. And if you have any questions on that stuff, don't hesitate to reach out. But essentially, once the funds are at the trust company, you can now lend within your RRSP and earn these rates of return with all interest and fees being paid back into the RRSP. The key here is if you go to transfer your funds and you hear the word withholding tax, you are doing this wrong. We are not redeeming the registered accounts. We are transferring them to the trust company and lending within your RRSP.
And you help us with that. You take care of all that for us.
Absolutely.
And when we say RSPs, our ESPs, TFSA, LIRA, all that kind of good stuff. Okay. Now, whenever we're doing this, we're going to make sure that we're putting a lien on the property where we're registering on title. We need a lawyer for that. It can cost $1,000 or so. Who takes care of that cost? Rav's lending the money to Kyle. Is it Rav that has to take care of these costs, or is it the borrower, Kyle, that takes care of that?
Yeah, so the return that we're talking about, the 12 plus 1 for Rav, that is your true net return. The legal cost, there will be a lawyer representing you and your interest in the transaction. They are bound by the bar to do that. The fees of the lawyer are always paid by the borrower. Kyle, in this transaction, would be covering Rav's legal costs to have his loan registered and secured against my property. And the lawyer, even though I'm paying his fees, this is an important one that people ask all the time, even though I'm paying Rav's fees, the lawyer is representing Rav's interest and protecting Rav's security in this transaction.
Okay, great. Now, let's say, this is, $2 million that Kyle needs. Rav only wants to lend him $200,000. We now need 10 Ravs at $200,000 each. Do you take care of that in finding the 10 Ravs? Or do I have to go out and have a group chat and huddle everybody around the soccer field?
No, that's absolutely something we take care of. And certainly a thing that many of our lenders like to do, where they can spread money into a couple different deals and give themselves some diversification, as opposed to, even if you want to lend $2 million, not putting it all into one deal, spreading it out. So absolutely something myself and team take care of.
Yeah, wise words. So what are some things that you are personally working on? I know you had some elephants of deals in the Hamilton area, and what are you kind of working on right now?
Yeah, we have some exciting stuff. We have a small multiplex in Kitchener coming down the pipeline. We have a beautiful lakefront cottage up north in the Bancroft area. And we have several mid-sized multifamily properties that are coming down the pipeline as well. Today is a very rare day for me that I actually don't have a live deal today. But within the next day or two, we're waiting on some appraisals reports. Very important for the viewers and anyone who gets involved with the team. I don't throw mud at the wall and see what sticks. I only put out quality opportunities that I would put my own money, my own family's money into. So we have several deals coming down the pipeline, and excited to share with the viewers if they're interested.
Absolutely. Nothing more important than our integrity. Kyle, listen, thank you so much for being on the show. Always learn from you. Always get excited about investing when I talk to you. Thank you so much.
Thanks for having me, Rav. Really appreciate it.
Absolutely. And thank you guys at home for watching. Make sure you tune in next week. Same place, same time. Honey, I love you. I'll be home soon. Bye, everyone.